Yo, yo, yo! Hello?
Hey.
See me okay?
Yep.
Morning, everybody! What's going on? Hey, Mr. Abels, how you doing? Michael, my man, what's going on? What else we got in the house here? Mr. Allison, Mr. Garland, hola. Mr. Gwynn. Adam, what's going on in the hood? Adam Spiker. Adam was our contest winner, Willie.
Yep.
A very sharp young man. Mr. Prim, back in action. Mr. Chris Prim just bought a house. His first one.
Nice.
So what's going on with you?
Not much. Trying to wake up.
You look winded.
I've been kind of sick lately. I've had a bad cold and sore throat, so I look rough.
I mean, I'm fresh to death. I could be going out right now. I got new clothes. I mean, new outfit every day of the week.
How's your sister?
She's good. We just been hanging out at the beach and stuff. It's starting to get dark.
Does she like the beach?
Yeah. I mean, it's right there. What else? There's nothing else to do in this town. You go to the beach and walk around, and if you can't do that, then you're really going to be shit out of luck.
Have y'all been to the water park this there?
Big Kahunas?
Yeah.
Yes.
It's so fun.
Big Kahunas is awesome.
Yeah.
I wish there were like some little kids around that could babysit. I try to get my housekeeper's kids to come with me. She's like, I don't know. Da, 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 da. They're all about, so I'm going to try to get her to let me take them next week.
Yeah, that'll be fun.
Tony Giro, what's going on from Bali, baby? Oh, you're not in Bali anymore. You're back in Canada. All right, well, let's get started. So, folks, let's talk about what we're watching for today, and then we'll get this party moving. So, let's go over the indexes real quick, and then we'll move on from there. Tell me when you see my screen, Willy Wonka. Hold on. Let's see.
I see it.
All right, cool. So, in terms of the market right now, let me get rid of all these funny looking lines. Yeah, we've had a really nice bounce that's lasted 4 or 5 days. Now we're starting to get a little bit overbought and back into resistance. And you know, historically, you know, that would be like a breakdown pullback type of setup. Now, what I've noticed in this market, you know, of the last year or so is those breakdowns from the 50-day moving average, you know, when you run back into it, it hasn't really meant anything. See, we typically haven't bear flagged here and broke down lower. So the playbook says this is a breakdown pullback and we're overbought, and so this is kind of an area we should stall and then, you know, come back. But that's not what's been happening the last few times, and so you got to kind of be prepared for both, you know, for both moves. And so I've got a list of longs and shorts for the market because really anything could happen. You know, the typical technical analysis that worked for like a decade on at least indices, the last couple of years has been thrown out the window with all this liquidity and just this. I mean, this is since at least I've been doing it, and this is all Mary Beth's ever known. This has been just like one big bull market minus, 1 or 2 months every year. This is all you've known of, isn't it, Willie?
Yeah, except for that, I think it was like summer of 2011. It got wild for like the summer, and that was it.
Yeah. That was like there have been times like when we've had like the European news and all of that stuff. We've had periods where the market gets a little bit shaky, and then back off we go.
Yeah.
So you started trading in the time where everybody becomes millionaires. No, I'm just kidding.
Well, it wasn't during I think it was like a few years before I started when all the penny stocks were like going crazy.
Yes, that would have been like 2009.
Yeah.
So that's the playbook, So some of the stuff that we want to look at. If you're looking at just the NASDAQ or the Russell 2000, so the Russell 2000 is also showing the same kind of setup as the NASDAQ. So we got like, this is our kind of key breakdown line over here. And, after this big flush, we've run right back into resistance here of recent. And so we need to watch this area because the Russell's what kind of took down the markets in the first place the last month or so, and has been the weakest. And now we're kind of right back at that bear flag spot. And so we have this from all the indices, and so there's a little bit more caution. That's why yesterday, we were talking about in the chat room. It's like, hey guys, this is gonna be kind of a little bit of a tricky day. Mary Beth told me exactly at noon. She's like, you're up $2,000. You should just bail for the day. I bet you'll just grind it back all day. And that's what I did. It was small losses, but I kept trading for the next couple hours, and it's like, there goes $100. There goes $200. And I give him back like $500. Oh, sucker! Should have listened to you. But that's kind of what happens, when the market hits resistance. So the NASDAQ here is right back to highs also. So this one is definitely the more healthy of all the markets. So just something to keep an eye on. Let's bring out the watch list here, and we'll kind of go into what we're looking at. Dun, 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 dun. So one of the ones that I like for today that I'll be watching is this MBLY. And MBLY, so typically this is something that happens often with IPO stocks is, after your kind of initial push, either the first day or the second day, you'll start to get some level of shakeout that'll happen over a couple of days, besides really like Loco and GoPro that really took off the first few days. Usually you get a little bit of fade after the first couple of days. But once you start evening out, at least in MBLY, this 32 level was like a huge support. And once you start to kind of base out and find a level that, it's reacting with, once you can come out of your first zone, you can really have like a really nice multi-day run. So this is something I'll be watching for today.
Yep.
I like this bad boy. And you know what? We actually tried it yesterday, and then I sold it for like a little bit of a loss, and then it took off right after. But sometimes in day trading, well, all type of trading, especially swing trading too, you gotta sometimes take a couple shots before you hit it. Dun 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 dun. Let me see here. I've been watching this tour. Hold on. Make my daily chart up. This is a Chinese burrito, and after this flat top breakout, we've had kind of a nice, easy 4 or 5 day pullback, and we're getting right back to the 20-day moving average. So it'd be two levels of support that we'd be watching. Is either it starts to bounce here, or it's going to start bouncing in this particular zone. You might be one of those things. You take a couple shots. You try the bounce here. If it doesn't work, then you wait for a lower price and then try this bad boy again. And actually, around this area, you'd be able to get a lot better reward to risk ratio. Probably a stronger bounce spot. Dun 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 dun. I'm watching this one for a potential short. So this is beta. So this is what we call a rubber band short. You know, when you get a stock that's been running for, you know, X amount of days and you start to get super overbought, and then, you know, there's, in the rubber band short, we use a whole different confluence of factors that determine, you know, whether it's stretched or not. But this one is starting to kind of hit on all cylinders, and so this will be something that, you know, I'll be watching for a potential short. The thing is, you're going to have a really, really rock solid intraday setup to be able to measure your risk. So at some point, it's going to have to make some levels so that you can nail down, you know, your risk, so you're not just getting smoked out shorting it blindly and then it just starts to fly. Because a lot of times this type of setup, it can run for a couple more days than anticipated. You know, and every time we've tried, you know, whenever I've done rubber band setups in the past, like, you know, whether it was the big run and plug or anything like that, you know, oftentimes, you know, it takes a couple days. You know, it takes a couple tries before you nail it down, at least for the big one. And this by no means is some dumpy stock that's just going to tank 50 cents. This is a rubber band short is meant to be, you know, a quick counter trend type of trade that, you know, you can take back to sometimes, you know, your next level of support, which in this case would be kind of more in this zone. Dun, 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 dun. What else do I got? If the market does start to fade, I'll be looking at something like this. This is trip for, you know, potential bear flag. So this stock got smoked out on earnings and had a really, really decent drop here from 105 down to, you know, about 90 bucks. And the last so many days, just some really, really low volume. It's been grinding higher here into a bear flag. And so if the market starts to get weak, you know, this is something I would be looking for a potential short. And, you know, your first target would be kind of down to this 200-day moving average, but I'd anticipate if the market was weak for a few days that this would actually probably break down. You know, same type of deal with the SPWR. So, you know, this thing got smoked down on earnings. And then, so you got like a nice, easy kind of grind, you know, back to the breakdown spot. And so that gives you an easy way to kind of measure your risk, and then we'll give you some upside too in case the market starts to give you the funk. Dun, 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 dun. And then I got this FEYE on watch also for short. So you see this 30 mark is really the sweet spot that it needs to break. But, you know, even before it gets that, you see here, you're starting to build just a little bit of a full, you know, kind of a channel right here where it's just hanging out. And so if it cracks here, you get down to 30. Then if it cracks 30, you know, you'd be back down to your lows. Dun, dun. You like Leanne Womack, Willie?
Yeah.
Me too.
Check out this monster stock, MNST. Scapping on the earnings to new highs.
Okay, okay. So this stock is already just blown through 100. So you're looking at a stock that's, you can see it's never been up to 88 or 100. So you're already at all-time highs, which is, you know, you can see here this is a flat top breakout that's going back quite some time. It's a weekly time frame. So you're starting to bust through all this, so that gives us really a lot of potential upside. And you've got really a flag that's been developing, pre-market, and usually that can be a good sign. We did the same type of deal when we played CSIQ. Oh, it's not showing it back then, but CSIQ is kind of like the same thing. When it went on this monster run, you saw it in pre-market. You started having a flag develop even pre-market, and once it took it out at the open, it was just off to the races. Not bad, so we'll stick that on the list. What else you got?
Well, USU from yesterday, it looks like it's going to open green right below, somewhere right below yesterday's high, so it could be in play.
Oh, good stock.
No.
No, I'm just kidding. Actually, I made so much money on it the first go around, then I dipped my toes back in, and I lost 20 cents on it. A little sucker. I always do that. It's you make money on the first one, you take like this huge rip, and then boom, the next one, it's like you just got to go back into it.
Anyways, it's probably in play today.
Oh,
Always.
Yeah, so 725. So yesterday, one of the things, it ran right into resistance. You can see here, this like 719, 720 area has been like the spot for months. So yesterday kind of did what it was supposed to do. Had a huge spike, ran into resistance, faded back. We'll keep an eye on it today.
And then your JD stock is gapping. That's why it wouldn't break out yesterday. It had earnings.
Little sucker. So JD is a stock that we've been, it's a flat top break on. So I've been trying to hit this thing for the last couple of days. And I did not check that the earnings were around the corner. Oftentimes, if a stock is stuck, that can happen right before earnings. It's like nobody wants to make the big play in it. So this stock is gapped down a couple bucks and starting to move around. So when it opens at 27, you're going to start clearing some levels here. So we'll see if we can kind of stay under these MAs and under this consolidation area. If that does, that'll give us some upside or downside to potentially play. What else you got?
I'm looking. What's going on with ACHN? Oh, it had earnings a few days ago. Never mind.
I think there was some type of buyout chatter. I mean, this thing has consolidated long enough. I mean, the big pop came in June.
Yeah.
Yeah, and you had a really, it's an easy-go-lucky flag pattern right here. So now it's off to the races. But I think there was some chatter for potential buyouts and stuff like that. But it's hanging. I think it's probably got a little bit more upside.
One that I like that Syed had on his watch list was UNTD.
Oh, I know this stock. This stock trades a little bit thin for me. I can never get any size in it. So I like the daily. I like the daily and kind of what he's saying. The stock just trades at times like it. You'll have the volume in it. And usually it trades pretty thin. So it's hard to get any juice behind this thing. Now, some stocks will trade thin, like 400, 500, 600,000 shares, but they move easy. And then there's certain stocks, I don't know if it's just because it's a retail stock, it just kind of moves funky. I've never been able to get any rhyme or reason in this thing. But the chart is nice.
Yep.
Dun, dun, dun. Let me see. Any shorts?
Just the ones you mentioned, and let's see. As far as gap downs,
Word. The earnings season. Emma, what's going on?
Hi, everybody.
MQ is always gapping down.
Yeah.
Gapping down again. Let's see.
What's up, Ma?
Need a coffee?
Yeah, I'll take some coffee. Let's see here.
JD is the only one I see right now. WB, but nothing big.
Hold on. Yeah, you're right.
Man, Monster is just ripping pre-market. It won't stop.
Yeah.
I hate when they break out pre-market and they don't wait.
So guys, it's something to watch, you know, when you start getting into this area, is that when you get these big spikes like that, especially on $100 stock, you know, these are pretty big moves. You don't want to buy this type of stuff at the open. You've got to wait for, you know, some type of setup. And so if you're ever going to trade the open, by the way, especially stocks that have earnings or news or anything like that, if you're going to trade the open, you have to have a really, really strong toolbox of setups that are designed specifically for the open. So there are setups like flag patterns and flat top breakouts and things of that nature. Then there are patterns that are designed just for the open. And so if you are not good at opening range plays, then you can't trade the open because it's going to be too nasty. And the open is the hardest part to trade in stocks. You know, that's where you can lose the most money. You know, I've had so many days where Mary Beth comes to me and she's like, I don't know why we ever trade the open. You know, she's like, we just know what's going to happen. And because it's so hard, because when you're trading the open, there's so many different factors that you have to be so good, because you have to size your position just perfectly, because if you're in too big, you're going to hit your max loss, you know, you're going to hit your max loss right away. And that's what happened to me. That's what's happened to me and Mary Beth so many times over the years. You know, for those of you guys that have been with us for a while, you know, our hedge fund Click Fund, we put max losses on all our traders. So now we have like 250 traders in there. And thanks, Mom. And, you know, we put max losses on all of them. So my max loss is $2,000. Mary Beth's max loss is $5,000 because she likes to get a little bit more wild and then make comebacks. And then, you know, the average new person would be like $300 or whatever. You know, that way you don't get your ass kicked. But if you trade too big at the open, and you have no way to really measure your risk because you don't have any patterns or candles or anything to go off of, you just end up hitting your max loss right away because of the volatility. I mean, you're talking about trading stocks that are up already $30 pre-market or $20 pre-market, and you got to be so quick. So the open is tricky because you got to trade smaller, and sometimes you can trade big, but you got to have the perfect setup. And then you've got to have a real strong toolbox of opening range plays, like an ORB, quick pullback buy, an assortment of VWAP plays or things of that nature. And then you can go into the open. Until you have those or you're good at those, you're better off just hanging out, sitting on the sideline, letting something develop, and then trading later on the day when you have actual chart patterns where you can manage your risk and stuff like that. I think that that's really, really important. We've had so many days, me and Mary Beth, where we're sitting there on the sidelines because we taxed ourselves so much at the open and we took these losses and we're so beat down. And then it's later in the day, all those stocks that we were trading at the open, they set up into these just easy consolidations, and then they explode into the close at 2 p.m. and we miss them all because we're just spent. You have your financial capital, then you have emotional and psychological capital, and if you use up both of them in the first hour of the day, you miss all the easy money.
Yeah, it's true. The open is so volatile, especially the first 10 minutes, that if you're a new trader, and if you do want to trade the open and start getting used to it, you just need to go really small because it's really wild at the open. Really, really wild.
Now, on the other side of things, when I'm in my groove, and for me, being in groove is just more of a matter of mood. When things are going well and you're in a good mood, you usually can trade pretty well. When I'm in my groove, I can make all my money at the open, and I don't have to do anything the rest of the day. And so that's the dark side that will suck you in.
Yeah.
When you're mentally and psychologically in a good place, and you're not going in too big, and you're not desperate for money, and you're really going and trying to just trade the setups at the open that are specific to the open, you can make all your money for the day in the first 30 minutes and then hang out, which is just awesome. We've had some years where Mary Beth will sit there, I'll just trade the first 2 hours, and I'm all right, I'm going to the beach. And this is a few years ago, and then Mary Beth will send me a text message, what do you think our subscribers are going to think when you're just sitting at the beach all day? And I'm like, that I'm awesome, It's what am I supposed to do? I made my money, and I got to go. And she's like, it's just setting a bad example. There's nobody there to do anything. And I'm like, well, I'm not going to do anything. There's nothing for me to trade. I already made my money. It's time to go.
Yeah, I never understood it because when you're new, you're wanting to trade all day long, but over time you realize that's not a good idea. It's you'll wear yourself out, and then you'll just blow yourself up the next day or something. So you have to literally pace. It's like you're running a race. You have to pace yourself with trading because everyone gets it's emotional capital. You have to take a break and go do something else sometimes just to come back fresh, and you'll trade a lot better. So
that was awesome. She was so excited to learn all the time, and we were sitting on G-Chat when I was teaching her. So it was come back and trade. This is bullshit. I'm ready to learn, and it's I just put on a show for you the first hour of the day. I'm done.
Yeah.
At that time, we had a much smaller business. We may have had 50, 60 people in the chat room, and they were all people that we've known for years and years and years. So, I didn't have the business interests either where I had to, sit there and work all day. And, we weren't even doing classes at that point. So it was once my day was done, it was, really done. And, boy, that was the life.
Well, it's true. You don't realize, in trading, you think it's so methodical. Okay, if I just learn the methods in the class, in the boot camp or whatever, then I'm set. But it's not true. You have to put in the practice and trade on the simulator and get your emotions in check and work with Dr. Winter or whatever, because that's almost just as big of a part as learning the methods too. It's you don't realize it when you start out, but it's the emotional side is probably harder than learning the methods to me. And I think every time I get an email from someone, everyone's saying the same thing. They're like, okay, I understand what I did wrong. I just got too excited and took all these trades. And I'm like, yeah, that's part of it. You have to get your emotions in check. There's no one can help you with that. You can you have to do it yourself. So.
Yeah. I mean, it's tricky. And people always say, it's like, well, I know what I did wrong. And it's like, I know you know what you did wrong, but you're going to do it again.
Yeah.
Everybody knows what they did wrong, but 99.99% of the people are going to just do it again. And then I say, well, I know what I did wrong. I know what I'm doing. It's like, yeah, I know you know what you're doing. You have a plan to stop it.
Yeah, that's why you have to literally give yourself time. You have to leave. If you make money in the mornings, take it as like a vacation. Go take the rest of the day off and take a break or whatever.
I do it all the time. I'm big on giving back profits. There's like, I don't know if it's something mental. You can only make so many good trades in a row. It's nearly impossible to make 10, 15 good trades in a row. You know, even if you have the skills to, you just get sloppy after every win. So for me, it's like if I make 5 or 6 good trades in a row, it could all fall apart because I get sloppier and sloppier and lazier because it's like, well, I'm up $3,000, so if I lose 500, who cares?
Yeah.
Then it happens again. You lose 500 more, and it's like, now you're not up $2,000. You don't think of it as you're up $2,000. You think of it as you just gave back $1,000.
Yeah, and then you start trying to get it back fast, and then it's
never-ending spiral. I've never actually started off the gate and then lost like $4,000 or $5,000 just from bad trades. Anytime that's ever happened in my career, it's because I was up a bunch of money and I gave some back.
Yeah.
And then I started clawing to get back where I needed to go, and then boom, you lose it all.
Yep. It's true story. I know people are probably like, these people are crazy, but it's 100% how it works.
Let me see. So Twitter, we got a couple questions. Boom, 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 boom. Hold on 1 second, brother. So Mateo, you know, this is a stock I got in my swing accounts also. If you wanted to get Twitter, you would have had to buy it down over here. The reward to risk ratio is not good at this level. If you're looking for a swing, if you're day trading it, you know, you could take your intraday setups. But if you're swing trading it, now at 45.33, you're already at halfway to resistance. You got $2.70 upside, but you've got basically $2.70 downside also. So you're right in the middle of the range. So the move in Twitter, the easy money is over for now. It's you got to find a better stock. Dun, 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 dun. Patrick Cruz, what's going on? Let me see, Patrick Cruz. FLT, this is the stock you like, I take it. Dun, 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 dun. It looks alright. You know, nothing. I don't know if I'd play it, but I mean, I see that it's a strong stock. I like my stocks to look a little cleaner. Dun, 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 dun. Let's see here. AP, do institutions participate in pre-market trading? I mean, anybody can buy something pre-market. You know, if the news comes out and it's good, you'll see anybody, you know, people jumping in all over the place. Hey, Steve, how you doing? Steve says, what are your time frames for intraday charts? I typically use 5-minute charts. But in certain scenarios, I'll move to either a 15-minute or 30-minute chart to smooth things out. And then there are a few minute setups that I'll move to a 3-minute. Michael says he's been trying to short PEIX. Oh, really? PEIX has just been running for 2 days. I don't know if it's that extended where you gotta, it's in a nice trend, but just because something's in a trend doesn't make it extended. You know, it just makes it in a trend. In terms of its actual actual recent move from this consolidation right here, it's only on day 2. So it would be, in my opinion, probably a little bit early to try to short this thing. The other thing is, when you're shorting stocks, I mean, you really want to see them get vertical. The more vertical they get, the more stretch they get. And that adds more probability to your short setup. This particular stock also, due to the float, it being 20 million shares, is going to move really, really wild. And there's a good shot that you're going to get shaken out a few times. The low float stocks are tough to short. They're fun, but they're tough to short. Jason Laffler says, how do you beat that out of yourself? So, Jason, you know, that's a real good question, and everybody knows. Jason's talking about the mental side of trading. You know, I was actually just talking to one of my students about this. You know, you can do all the mental exercises you want. Everybody knows what they're doing wrong. They know how to look at charts. Looking at charts is pretty easy. But then you got to control yourself. And it really comes down to one thing. How bad do you want it? That's what it comes down to. Most people are actually very scared of success, or they don't believe they can get it, or they don't believe they deserve it. And it comes back down to, how bad do you want it? Are you willing to make the change and knuckle up and not get yourself in trouble? Because you know not to chase stocks. And you know that you're not supposed to oversize certain types of positions, yet you do it. And in the end, you just got to ask yourself, right, how bad you want it. And if you're really, really, you want to be great, you're going to have to make the change. And it's always going to boil down to that. Shorting BIOF2. Boom, boom, boom. This stock is just starting its run too, so yeah, at some point it's going to be a short. That's a tricky stock to short too. I've been smoked on that stock before. Ryan, when does the next boot camp start? Let's see.
So it's September 28th.
September 28th?
Yep.
Omar says 14.
Tim just called me yesterday and changed it.
Okay. So it's our normal schedule. So September 28th, the next one will be starting. We just started up our current one. Seems like we got a fun class this time. I mean, we always have fun class, but we got some.
Yeah, but people can, like, if they want to go ahead and sign up, if people sign up early, they can get their book in the mail and start reading through it, and also they can go through, like, the old recordings. That's what I always tell people. It's good because you want to, the more times you hear the material, the better. So if they start early and they go ahead and get, some knowledge prior to the boot camp starting, the better. So anytime if someone wants to sign up early, it's fine.
That's true, guys. A boot camp class is a 60-day long class. So, I mean, when you're talking about 60 days of really punishing your brain, sometimes getting an early start and reading and getting things ready even before class is a good thing, because class is very taxing. I saw it yesterday. We were doing the go-to setups class.
Yep.
And so, we did the first two, we did the breakouts and then the pullback class. So that was Sunday and Tuesday. Then we've been doing the go-to setups the last couple days. And, it takes so long just to figure out, like, flat top breakout, flag breakout. That already's blown, your mind, even though you know all that stuff. And then you start going into red to green moves, rubber band snapbacks, bottom bouncers, $1 rolls, squeeze zones. All these plays you've never heard of, and you're like, and I ask everybody, like, all right, does anybody got any questions? And everybody's just like, and and so I had to, like, get the conversation going, like, talking about the different stuff, and then all of a sudden, it's like a 2-hour Q&A once everybody got started. But it was just, at first, it just blows your mind. It's so much information, but that's what trading is. It's the hardest thing around, and so to be good, you have to have a ton of setups and a ton of stuff going on. And the book is the Trading Bible, Eric. You are correct. Dun, 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 dun. Hold on. Hey, Kyle! Welcome! You know, Kyle Stanford just started. I didn't know Kyle was just started trading live. Oh, you know what? K to the S. I got you. Kyle, make sure you give me a little bit of an update. I haven't gone through the sheets to see who started trading this week. I usually do it on Friday evening. All right, guys, we got to go. We got to get ready for the market and all that fun stuff. Adam, this one, as long as it kind of holds this area, it looks okay, but it's just sitting in consolidation right now. I would have rather not broke kind of this low. And boom, 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 boom. Hey, to answer your other question, I live in Destin, Florida. That's why I'm always rolling to the beach. Maybe someday Willie will live here too. All right, peace, guys. We got to go.